Hello and welcome to the channel. This is Mike Berger. Please like and subscribe if you like this content. So I'm just going to jump into this. I am going to be demoing a spreadsheet that I've been using for years for personal budgeting and forecasting income and expenses, as well as ending cash balances in checking. So there's going to be a link in the description to my Etsy store where this can be purchased, so feel free to check that out. So I'm going to focus on the main points here just to keep this short. So please let me know in the comments if you'd like a more detailed dive. So looking at the spreadsheet here, this first section is pretty self-explanatory. So we've got months across the columns here in row 3. So row 2 is just saying if it's budget or actual. Row 1 is the number of weeks, and the number of weeks is really kind of tied to forecasting the income. So in this case, this is set up for a weekly paycheck. So what the formula is doing here, it's just taking the number of weeks or the number of paychecks times the weekly amount entered in column F. The formulas for taxes, benefits, and flex spending. So taxes is a percent of that. Benefits is, again, based on the number of weeks times the entered benefit per paycheck. Same thing for flexible spending account and then retirement. So if you were getting paid bi-weekly, this number would be 2. So it might be 2, 2, 3, etc. So the total of that is your total worked for. So there's a number of other income items here. So you've got pension, contract wages, interest and dividends. The income tax line here is really so at the end of the year when you do your taxes, you're either going to pay in or you're going to get a refund. That's really what this line is for. So most of your taxes is going to be in row 7 here with your withholding on your paycheck. So below that is the expenses. So I've got auto and then a number of items below that. Charitable, housing, property and casualty, which is your car insurance, property insurance. You've got controllable. And again, there's just a number of items there. That sums up to base living expenses. And then I've got a section for other expense. So these are kind of one-off things that might happen throughout the year that aren't always controllable. So that I just like to kind of separate that out just because it's easier for budgeting on that. So it's all kind of netting down to a net income line. So the way this works, most of the cells in blue, you're just going to input an amount per month. There's a number of lines that maybe you don't know the timing, so I've kind of got a formula here where you can just enter something in this column S. And what it does is as you're bring in actuals, maybe I'll just use this for an example, auto expense. I'll just say, I bought tires for 1,000. So that then the total budget in December is adjusted down by that amount. But the idea here is that you're going to spend a certain amount, you just don't know what the timing is. So as those amounts come in, it just adjusts the final so that the total reforecast is the total amount that you were planning. So that's what that is. So if you wanted to use this formula in any of these other lines, you can certainly do that. It's just a matter of copying it and pasting it over one of the existing, and here's where you got that. So let's kind of put that back. So, oops, yeah. Okay, so in column T is the total, so that's just summing up everything here. In column V is an annual plan. So the way I've got this right now, I've just got a formula here that's referencing kind of a value here. you don't have to use that. I just kind of use it because it's easier to maintain, as you're bringing actuals in. If you're going to change the plan amount, um, you can certainly just type over this, whatever that might be. So if I was to use this, what I can do here, after I do my total budget for the year, I can just kind of copy everything in this column T and just paste it as values over this in this column Z, and then it just automatically flows into here. So for example, if you're bringing in actuals, you're spending a lot more in one item and you want to adjust the plan, it's just an easy way of just doing that. Then you're not fiddling with overriding formulas in here. So then in column, so we got the annual plan in column V. Column W is the variance. So if it's a positive variance, it's going to be highlighted in green. If it's a negative variance, it's going to be highlighted in red. So for example, we'll just say we're going to spend more here. So you can see here, a positive in the expense line is a negative variance there, and that'll flow down to the bottom here as well. So this column Y, so this is something. So I currently use Quicken as my source. It's where I'm downloading all the transactions from my bank, and then I just run a report and export out of Quicken, and I paste it into this section. So the way this works is you paste that output here. So I've got formulas in this column AC that kind of strips out. In Quicken, you can have kind of different levels. So you might have controllable and then the account. This formula basically is just stripping out, this top level just to get down to the posting level here. And then what this column Y does is it has formulas that are looking up based on this VLOOKUP mapping in column A, and then it goes and finds the actual amount that was exported out of Quicken, and then based on the month as well. So let's say we've gotten through January, we've gotten all our transactions of the Quicken, we've exported it, pasted it in here. Now I want to start doing my forecast with actual, so I can change the month here, and then it's pulling all of that in, and then I just copy everything that's in gray here, and I just paste right over this. So now these formulas are actually going in and pulling what's going through Quicken, and then I've got actuals in January here, and basically my budget February through December, and the total here is my forecast that I expect to be at the end of the year. So you're going to keep doing this as you go throughout the year, and of course, the actual budget amounts can be changed as you know what you're going to spend, and then you're just kind of getting an accurate forecast to the end of the year compared to your original budget. So this is kind of the income and expense forecasting. Below this, I've got a cash flow estimated cash balance, and this can get a bit complicated, but what it's doing here, it's taking the previous cash balance, bringing down the income from the net income line, and then there's always transactions that are going to be going in and out of your checking that aren't flowing through this income expense line. So, for example, on your mortgage payment, the interest expense is going to be going through the income statement here under housing. So I've got it under mortgage here, but that's just the interest component. You could set this up where you're running both the principal and interest through this. It's really up to you. But in this example, the interest is up on top and the loan principal payment is coming down, is being taken out down here below the line. Same thing for IRA contributions and any other kind of balance sheet transfers that you might have. So the other component too is with credit cards. So in my case, I'll charge a lot of things, a lot of those expenses when I'm pulling into Quicken, they're going through the income statement above. But as you're making payments on those, so I pay the balance off at the end of each month. So in order to know what the change in cash is, so you take the previous credit card balance and you compare that to the ending balance, and if it's increasing, that's a positive change in cash. If it's decreasing, it's going to be a negative change. So you get back down to an estimated change in cash, and then you've got an estimated ending balance. And this is a good, I think, tool to just to estimate, cash needs. If you're going to have to take loans or move funding from savings to, to cover some expenditures. So the other piece of this, when you're copying your actuals here, there is a formula on, so like on the credit card balance here, if it's an actual one, so it's either going to use the actual ending balance of that credit card. So out of Quicken here, I had dumped in a bunch of balance sheet items, from checking down to credit cards and whatnot, and that's kind of summarized down here. So obviously you'd have to kind of link this up, but it would take the ending balance and plop it here. If it's a budget, it's just taking my estimated average, what I would expect it to be at the end of the month. And that's kind of how that works. And then same thing with here, there's kind of a check for the actual. So if it's an actual, it's comparing the estimated ending based on the formulas to what's actually in Quicken in this example. So in a nutshell, I guess this is just kind of a real high level view of the spreadsheet. So if you made it this far, thank you. Let me know in the comments if you like this, and if you are interested in purchasing the template, there is a link in the description to my Etsy account. So I want to thank you again, and I'm wishing everybody a great day. So thanks.